We're continuing our year-end wrap-up now. Let's talk a little bit about politics, gentlemen, and the economic situation, both here at home and abroad. And Larry, let's let you weigh in first on all of that.
Well, you know, in spite of all the hoopla, I don't really think the presidential election had much of a direct impact on agriculture. But there is a situation where we need to understand somewhat better that the foundation that is being laid here for what's to come is very important, and we'll get into that a little bit later. But I think we're all just kind of sitting on a precipice of what's going to happen next, both in the economy and beyond that. The prices we were just talking about, I think many of the foreign markets are blaming us, rightly or wrongly, about the high price of foodstuffs, maybe saying that we're turning it all into ethanol instead of providing food. So that debate is still going to be back there, and it's playing into part of the Arab Spring unrest. I think what farmers can look toward as they begin to see how the market worked this past year is we are breaking all records, both net farm income and trade. We're selling more than we ever have to the rest of the world. And all you really need to do is look north, south, or west to see where our major markets are. So in spite of the fact that Europe seems to be falling apart, that has not been a significant impediment on how we're doing in agriculture.
Kim, your thoughts?
Well, I think you got to look at the economic and political situations, not just in the United States. I don't think our economic situation has had an impact on our prices at this point, but they have had a secondary impact from what's going on in the European Union with Greece and their economic problems, with Spain and their problems, and the different countries in the European Union, and the concern about the euro. Is the euro going to hold together? China also is having some economic problems. There's the potential for them as an importer of our products, and some potential price impacts there. And then you've got places like Australia, which are relatively sound, and the Australian dollar has increased in value relative to the U.S. dollar. And we compete directly with them on livestock or crop exports, and it makes us more competitive. So the economic situations have been positive for us price-wise as you look at places like Australia, where our dollar has decreased in value relative to those currencies.
Darrell, your thoughts from a livestock point of view?
You know, on the livestock side, there's a couple of things. The international trade on cattle and beef continues very strong. We set a new record in 2011 for beef exports, and we're going to be down a little bit from that this year. But you know, production is also falling, and so when you look at exports as a percent of production, not only in 2012 but even more so in 2013 and 14, it's going to be holding pretty steady. Our prices are working higher because of the supply situation. The Australian dollar and the Canadian dollar are two particularly important currencies relative to the U.S. dollar, because we compete with those two countries in third-party countries in the Asian markets or wherever, and so that's a very important consideration. Imports, on the other hand, have been low but are increasing a bit. We've got some additional demand for hamburger in this country, and that's what a lot of our imported meat is used for. And again, with high prices here, that attracts more meat into those markets. So the international trade part of that is going to continue very important, even though it's going to back away a little bit from 2011 levels. On the domestic side, you know, the macroeconomic effects on beef demand are going to be really important over the next couple of years. We see a very strong correlation generally between domestic beef demand and macro factors like the unemployment rate and the overall income situation for folks in the U.S. And so the rate of recovery, the continued rate of recovery, is going to be a key factor in determining how fast and how soon and how much beef prices in the U.S. They're going to be under pressure to go up, and so that demand factor is going to be an important limit probably to how quickly that can happen as we go forward.
We like to talk about high prices. Producers like high prices without question, but let's talk a little bit about the cost implications and kind of how that factors into profits as well. Kim?
Well, you look as prices have went up for what we're producing, the prices have also went up for the inputs, and you'd expect that because as prices go up, producers want to increase production, and to increase production, they got to increase the inputs. That increases demand, you get higher prices. You know, that's a long ways around. But look at fertilizer. You know, you can go back to anhydrous or phosphorus or potassium, and down around $200–300 a ton as you get back in 2003, 2004, 2005. In 2008, we had a peak with them all getting up around $700 or $800 or higher per ton. Came down into 2010, and then with the drought, we brought them back up, and with the higher prices, we brought that back up. And you also got to realize that a good portion of our fertilizer is imported. And as we were talking about with the value of the dollar, as it's increased relative to some currencies, as it's declined against others, it's impacted the prices of these inputs. You look at machinery prices, they're higher. Just about all the prices across the board are higher because we've got higher output prices and increased demand for the inputs.
And in terms of feed prices?
Feed prices are at record high, you know, for cattlemen. Hay prices set an all-time record again this year. They've gone up dramatically in the last 2 years. Obviously, high corn prices and grain prices generally has greatly impacted the feedlot sector. So, you know, I tell producers right now, marketing is probably not your biggest challenge because we've talked about high prices. If you have something to sell, it's going to sell pretty well. But whether that turns into profitability is really going to depend on that cost side. And so, you know, you have to manage production, first of all, to produce something, but also then do the best you can in the face of higher input prices to manage that input cost and translate that opportunity in terms of the revenue side relative to cost into a profit opportunity. And it's a continuing challenge, particularly with the continuing drought conditions. Our producers are on the defensive. In many cases, they're having to use sale proceeds from drought to continue production, and that's going to make it you know, a real challenge at some point when we have to rebuild and try to recoup that equity that we're spending right now.
And we definitely hope that sort of regrouping process can maybe start as we move forward. We'll talk more about what we can expect in the year ahead coming up, but first, here's the guys from ShopStop.